Good morning, good morning. I think we're almost spoiled for choice for our discussion because that was a very comprehensive macroeconomic outlook. I gleaned a few things from it. First and foremost, the staircase doesn't look so good. And what I'm talking about is the staircase for growth. I'm going to turn it upside down and say 4% for emerging markets, as Christoph was suggesting, and as emerging markets editor for CNN and CNN Money. It's not the 6% we saw recently. Overall growth of 3% around the world is meager and the worst in 10 years. And you saw the OECD, or the developed world, growth of just 2%. But we are entering a new reality. And in my role here, sitting at the crossroads of East and West and at the heart of the oil belt of the world, if you will, I probably spend 30 to 50% of my time, depending on the week, covering energy. The new reality is not $110 to $120 a barrel that we enjoyed for the better part of 4 years, but $40 to $60 a barrel, and I may be generous suggesting 60 over the next 2 to 3 years. It all depends how it plays out and how elastic the shale producers will be in the United States. We saw the debt levels quite high, and that may drive down production in the US, but they are much more elastic than they were 3 or 4 years ago. It's going to be a very competitive landscape. And the reason I singled out oil today is because it has a ripple effect throughout the Middle East and North Africa. 3 or 4 years ago, you saw that Gulf wealth going into North Africa, markets like Egypt, Syria, Morocco. Are people reevaluating their hotel investments for the future? We see that room rates are starting to come down as well. Is this a blip, or is this a continued reevaluation of the climate in the Middle East and North Africa? That's a good place for us to start. We're going to have about 35 minutes for discussion. I've got pretty good eyes, and my contact lenses are in. If you have any questions towards the end, we're going to try to allow at least 5 or 6 minutes to pepper our panel with the most important questions that you have today. I appreciate, Jonathan, the invitation back to AHIC. It's always good to be here. I'm based in Abu Dhabi, but I spend about half my week in Dubai because of all the activity that's taking place here. I'm going to introduce the guests one by one, but let's give them a nice round of applause after I finish. First, let me welcome to the stage Dr. Badr Al Badr. He's the Chief Executive of Dur Hospitality based in Riyadh. Humphry Hatton is the Chief Executive of Deloitte Corporate Finance Limited. He goes by John I at most events, but I'm going to try because I'm of a Greek origin as well. John Iossifidis is the Executive Vice President, Group Head of Corporate and Investment Banking for Mashreq Bank here in Dubai. And a very familiar face to the region is the Editorial Director of MEED and a friend, Richard Thompson, joining us here to give us his macro view. I'm going to loop this around so I can see you all face to face. We had an incredibly busy week here editorially for CNN, and I'm sure Richard's probably been keeping an eye on it because we've been watching Saudi Arabia and the Deputy Crown Prince unveiling quite a monstrous Vision 2030. In fact, last week we were all kind of looking at the National Transformation Plan for 2020, and it morphed into something much, much larger. A big issue, of course, is Saudi Arabia. We've watched some limited protests taking place in Egypt with the military taking a very strong hand there. I've talked about oil prices and the decline here. Christoph gave an excellent overview of the macroeconomic situation. Why don't we start in Saudi Arabia? It's the region's largest economy by a long shot here. This is a young Deputy Crown Prince who wants to modernize. Give us, if you can, Dr. Badr, your snapshot, if you will, how the region, but internally how everybody's digesting the blueprint to 2030, and if it can really go beyond oil in the next 4 to 5 years to get GDP, the private sector representing 63% of the economy by 2030. It's a big tale, but people are really interested to know your insights, if you can.
John, I don't think I can speak on behalf of the whole society, as you asked me, but I could give you some voices that I hear. I hear lots of the younger generation being excited, looking forward to this change. You've also hear from people who've seen plans, previous plans that have not been well executed, have some skepticism. Overall, my personal opinion is I am cautiously optimistic. I see that we have a very strong, ambitious vision. We have young leaders. We just want to see how we could take this all the way to the end to be executed smoothly.
Good. This raises an interesting point and something that the Deputy Crown Prince put forward in his comments when he unveiled it Monday. The 5 economic cities that people were very excited about because it was a big development opportunity, hotel opportunity. And he says we must do better on delivery in Saudi Arabia. And that seems to be the question mark. Vision at the top, delivery all through society from the private sector. And they want the private sector to take a much larger share of the burden going forward. Are you ready to commit, in a sense, in hospitality?
We have unveiled our new strategic plan 2 years ago, 1.5 billion riyal in investment. We are already ahead of ourselves in this plan, and we intend in all our heart to continue this plan, even under the new realities, the new oil price. The new plan gives us fuel, actually, to go ahead and execute it. The reason is we see in this plan a new renowned focus on tourism and on religious visitors. And these are 2 pillars that help the hospitality sector increase. We, as a developer, as a hotel operator in Saudi Arabia, see these as very positive if they are executed correctly.
Good. Let's get the panel's views on Saudi Arabia, and then I'll broaden out to look at the UAE investment climate, and then, as I suggested in my opening remarks, include North Africa as well, which I think is vital. Richard, do you want to jump in on your perceptions as a very senior editorial person in the region, how Saudi Arabia can unleash this growth going forward? Because the ambitions are big. It's a big blueprint.
Yeah, I think for everyone in the room, that you should be looking at what's happened this week in Saudi Arabia, the transformation plan. The 2 huge events for the region this year, the lifting of sanctions on Iran and the Saudi Arabia Vision 2030. It's the biggest economy of the region, and what happens in Saudi shapes the entire region. The oil prices have exposed weaknesses in the Saudi system, weaknesses that people knew, the dependence on export revenues from oil, the dependence on government spending. I think many of the aims of the vision, the role of the private sector, improved regulation and transparency, investment in youth, diversification of the economy. We've heard these things before, but I think this time it's fundamentally different. The oil prices are in a structurally different position because of, as Christoph said, the development of the production capacity in the previously importing countries. I think the technological change, which changes the way we do business, access to data, access to information, that's a fundamental structural change. And I think the generational shift that we've talked about, the youth population, creating jobs for them, but also the mindset of the millennial, the next generation of leadership in the kingdom and, of course, across the region. I think all of these mean that the statements in Vision 2030 this time, which we have heard similar things before, are much more real. There's much more credibility behind them. And I think the reference to the previous initiatives, the economic cities, there's been a lack of cohesion. This is the first time Saudi has published a strategy document. We've had it from Abu Dhabi before, and Dubai and Qatar, but that's quite a fundamental difference. There's a cohesive plan, and I think a lot of the actual structural fundamentals are different this time as well.
Good. I was pouring through that report under deadline because I was covering it here from Abu Dhabi and even the previous week. If you look through the document, originally the target was to create 1.3 million jobs by 2020. New jobs for Saudis. They average 50,000 job creation, which is actually impressive for an economy of that size. But I thought it was actually a net positive that they're being more realistic, and they stripped out that number of 1.3 million because you don't want to miss a target in your first 4 years of a blueprint. Let's get the view from our financiers on the table. John, do you want to jump in and see the importance of Saudi Arabia as an anchor economy and the feed through it has for Dubai or Abu Dhabi because of its sheer scale and size? And what are clients suggesting to you about Saudi Arabia?
Well, I think it's a bit too early to get feedback from clients in terms of their view on Saudi, but I think the developments in terms of opening up the economy, in terms of foreign ownership of companies in Saudi Arabia, that was announced earlier in the year, and a more progressive regime are only positive for the region. And I would actually share Richard's words. I think there's a lot of interest in the region with what's actually happening and not happening with respect to the opening up of or lifting of sanctions in Iran. So I think those 2 things are the biggest developments to create confidence in the region. But there's one big thing that we didn't hear about in Christoph's comment earlier today, which was, the region is significantly affected also by the geopolitical situation. So confidence around the region in terms of what's happening geopolitically and the tensions and what's happening in Syria and the war on terror, shall we say, is something that does weigh heavily in investment decisions, not just in Saudi Arabia, but across the region as a whole.
Yeah, it's a great point. I interviewed Masood Ahmed, who's the regional director of the International Monetary Fund, on Monday, and dovetailed that into my coverage on Saudi Arabia for the broadcast that day. It's very interesting that you suggest 1.8% growth is what the projections are for 2016. Very high budget deficits of 12.75%. Humphry, is that going to hamper lending as a result? Because there could be a crowding out between the government seeking to borrow and the corporate sector seeking to borrow, and we've seen bank deposits drop. I think it's a vital indicator of what could happen in terms of hotel investment.
Yeah, I mean, that's true in the region, but definitely true in Saudi, and I think we've already started to see that in the banking community. I mean, inevitably, the government has always been a major source of liquidity in some of the banking sector, and we're seeing some of that dry up. So I don't think anyone knows exactly how the implications of that are going to tie up. I guess it all depends on the success of the bond funding schemes, and we're already starting to see, I mean, only yesterday I think Abu Dhabi announced a $5 billion loan, and we're starting to see that in Saudi Arabia as well. I think the big question that leads to is, what is the international investor appetite going to be like for the Saudi bond market? And I think we've seen this very interesting issue recently across the other side of the world in Argentina, with a massively oversubscribed bond issue for a country which has had a series of defaults over the past 100 years. So interestingly,
I think there's such relief to have shall I say, a reasonable man in charge, or is it the people who take the risk appetite if it's the right signal, right?
Well, I mean, that's the point, I think, is the amount of confidence that can be placed simply in one person. Because institutionally, you haven't seen the institutional reforms in Argentina in a way to justify such a dramatic change, but the confidence in one person. And I think you may see that in Saudi Arabia, the confidence that perhaps we're looking at a new regime, a younger regime, coming in with a real action, not just to talk about change, but to actually implement it.
Good. Vital to get the support for that young leader as well. It's a sustained support throughout the ruling family and society, particularly the youth, as we've talked about. I see hands going up. Richard first, and then John, once you jump in. You wanted to talk about liquidity, I think, is important.
Yeah, I'm just interested to know Humphry and John's views on the tapping the international capital markets. So obviously, as liquidity or capital capacity falls as a result of government deposits dropping in the region, there's a need to tap into international capital markets, and tapping into big pension funds or international institutions, that requires a change, transparency, people opening their books. And I just wonder from Deloitte or from Mashreq's point of view, how difficult is that to do? Because
it's clearly a change in mindset. I mean, it's a change of mindset, right? Do you want to jump in first, John, and we'll follow?
In the context of, thank you. In the context of liquidity in the banking sector, there has been a reduction in government deposits. But if you look at the banking sector in the UAE, individual savings have continued to grow. So the loan to deposit ratio has tightened, but it is still there. I think the other thing that is happening in terms of tapping international markets, banks are actually funding themselves internationally a lot more. And you've got to look at, a quarter of the world is sitting with negative interest rates, right? So you've got interest rates here which are relatively more attractive. You've got banks sitting in Japan who are willing to lend, to UAE banks at 40 basis points, whereas from a credit rating point of view or the local interest rate point of view, there's an arbitrage and an attractive opportunity for them. So that's how they're funding themselves as banks. I think the other thing that's actually, you're absolutely right, as governments go to bond markets to raise and shore up their own balance sheets, there will be a crowding out of investment opportunities, and funding opportunities for banks and for corporates to grow.
What should we be prepared for then in 2017-18? We kind of know the climate is not phenomenal here. We see room rates inching lower. Dubai ranked in the top 5 in the world, but still with a decline at $234 in the first quarter of the year. Humphry, what worries you at this stage? And Dr. Badr, it'd be good to have you talk about your horizon in Saudi Arabia as well. What is your biggest worry looking at 2017-18? Is it really dependent on the recovery of oil prices for the Middle East and North Africa or not?
Yeah, I mean, clearly the recovery of oil prices can only be helpful for the region. I think that's pretty uncontroversial.
But we can't bank on that. That's the challenge.
But we can't bank on it, and I think you have to look at the individual economies within the region because they are very different. I mean, Dubai not being an oil economy, I think is showing remarkable resilience actually so far. And again, you know, the average room rate may have come down, but it's still world-class standards by any. The returns for investors are still attractive in the region. So I think here we can say, and probably extend that wider to the UAE, I don't see major black clouds on the horizon, and I think partly the government here has been very, very quick to turn off the tap on perhaps unnecessary expenditure. I think those that are more dependent on oil or had investment plans that required a very, very high oil price, so for example Oman, Bahrain, Kuwait, I think they are going to struggle more over the next couple of years. So I suspect those are going to be the more difficult economies, and they are going to struggle more to attract investment.
Badr?
From a hotel sector, what worries me a bit is that, and not only in Saudi Arabia, but in all the different sub-economies of the Gulf and the Middle East, is that there's a huge supply coming into the market. Look at Mecca, look at Jeddah, look at Riyadh, look at even at Dubai, 25% supply. I saw the JLL report yesterday. In Riyadh, they expect 50% new supply coming in the next 2 to 3 years, if that comes along. The slowdown in the economy might affect the delivery dates of these new units, but still the supply is huge. So the only way to absorb the supply is to allow for new demand. If the government does implement its plan, ease in the business visas, so more people come in, tourism visa that they talked about, the religious visitors. Also, if they incentivize local travelers to travel within Saudi or within the region, maybe we could absorb some of the supply with some more demand. But if we don't, then we're into, I think, more decline into room rates and occupancies.
But you raise an excellent point here, and Richard, it'll be bringing you back into the conversation. You don't want to waste a good, not a recession here, but a decline in revenues to reform. Now, we've seen reforms, even this idea of a GCC-wide VAT in 2018. We've seen higher utility rates, 3% surcharge introduced in Abu Dhabi in the last couple of weeks. But are we seeing enough reform fast enough and deep enough to really take advantage of the oil price adjustment, do you think? Candidly, do you see everybody moving as fast as they can?
I think it's going to be difficult to move as fast as we need. Certainly the intentions from the top of government are pretty clear. A lot of governments have moved quickly in terms of cutting subsidies and reducing their capital spending programs to try and balance the books or a bit more sort of control over spending. I think some of the more cultural changes will take longer to deliver. So one area I think that's very important, and it's particularly relevant I think for hotel and tourism investments, is public sector and private sector working closer together. So we hear a lot about PPPs for delivering capital projects, but I think in terms of tourism, for example, coordination of the development of tourism assets with hotel capacity, strategic diversification of hotel assets to broaden the offering available, training and education. The hotel sector can offer huge career and job opportunities. And the Saudi Vision 2030 has the tourism industry really as a major plank of its program. But that working together is actually, it's easy to say, but quite difficult to achieve. It requires different, handing over of control from ministries to private sector and things like that. And so I think the intention is there. The first steps have been put in place: the creation of PPP units, the cutting of subsidies, various new pieces of legislation. But actually, the longer-term, more challenging stuff is the changing the way people behave in ministries and actually in civil society generally.
Good. I see hands going up. Let's go Badr and then to John, please.
You always worry about the economy and how it's changing. That's our circle of concern. But our circle of influence, what we can do as hotel developers, is that we could not let this recession go wasted, as you just suggested, by benefiting from this time here, lower occupancy, to upkeep your properties and reinvest in renovations. This is the time to also push on your investments so that when you come out of the cycle, you're ahead. We've seen in the previous recessions, we've seen 3 or 4 recessions in the lifetime of our company, and the times where we slowed down and became over conservative in the downturn, we came out slower on the upturn. So this is probably a time to double up on your investment.
It's very interesting you say that, because the costs have obviously come down, so this is the time to take advantage of it. It takes us a bit of steel, right, or iron gut to do so.
It does.
You don't feel like you're taking a big risk?
We are deeply rooted. We're not going anywhere. We're a company that's been existing 40 years. We are locals. We are here. We're not here on short-term contracts. And we are developers. We build on the ground. So there's nowhere to go. We're here. So we believe in the economy. We believe in these nations. And we're here for the long term.
Yeah, I want to bring John back in, but I wanted to ask you a question. We were really shocked when we saw the tragedy in Mecca with the crane. Even more shocked when you saw a freezing of assets for the Bin Laden group,
Yes.
and then a backing off of that. So it almost shows a sense of immaturity. You make knee-jerk reactions, and it makes it very difficult for an investor. Can we have more predictability in such a vitally important economy going forward? It's not like, here's my decision one day and here's a decision the next day. It must be like it's almost the push and pull, or the rubber band snapping back on decision making.
I do agree with you that for investors to have confidence, you need a stable environment. You need predictable laws. With new leadership, I think there's a new teething time, or they need a period to settle in. And I think we've had that time. I would expect now, going forward, things to stabilize with this vision here as things play forward. I'm optimistic, let me say that. Yeah.
I think we should, in my 6.5 minutes we have here, bring up one of the points I brought up earlier, and that is Egypt, because of its scale and interest before. But I've talked to a number of different developers recently in visits to London and elsewhere, and they're getting very concerned again that while President Al-Sisi's provided stability, he hasn't given as much of a vision to economic development. And when I solicited this group beforehand for what they wanted to talk about, each one of you talked about the need for public-private partnership, the right economic development plans, and a vision. Who's worried about Egypt at this stage to actually unleash growth? Because it was pulling in investment before. People want to go into a very large market with the scope of a rising middle class. Richard, what are your thoughts?
I think everyone in the room knows Egypt and knows how important it is, and the fundamentals. You have 90 million people nearly, you have the Suez Canal, that key corridor, you have all these tourism assets, the cultural, historical and natural assets. It has all of these things and a very well-trained tourism and hospitality industry, great capacity. And I think there's a strong commitment at all levels to work in Egypt, but I think a lot of people have been disappointed at the rate of progress since the Economic Development Conference in Sharm el-Sheikh in March 2015. A lot of big promises, expectations were raised very high, and I think a lot of people have become a bit disappointed with the rate of delivery. There have been areas of progress, particularly the electricity and energy side. Then, of course, there was the Russian liner jet bombing in Sharm, which has knocked the tourism industry significantly. I understand that the Egyptians are creating a new airport security entity to try and restore confidence to international travellers and tourism industry that security is safe. But I think the President Al-Sisi has perhaps the political side of delivering on his promises has proved challenging, and the recent issue with the islands, the protests that have followed the ceding of the 2 islands to Saudi Arabia, I think that's the sort of political decision where there are ramifications that perhaps he's been a little bit naive on the way he's handled that communication. So I think the political uncertainty or instability is still going to give investors nervousness. And then there's the currency issue as well, the value of the Egyptian pound. Is it overvalued? Is it likely to be depreciated in the years ahead? That's going to put investors off as well. So I think there's a bit of quite a lot to be done actually to restore confidence. Everyone wants to go there, but there's quite a lot of sort of headwinds.
Good. I'm going to just open the floor quickly if we can. Are there any questions for the panel? I can go for another half hour with this group because they're excellent. Do raise your hand if you do. We have a couple of microphones with some of the students that are manning it. The other one I think we should bring up then, if we don't have it from the floor, you touched upon it, Richard, was Iran. I was visiting there twice in the last 6 months for CNN. Incredible opportunity, particularly in the hotel space. John, Humphrey, you want to give this a shot in terms of outside demand to go into the market? They're so eager to open up and trying to create a sustainable middle class. Your thoughts? I kind of depicted editorially for CNN Money as the last frontier market that hasn't opened up of scale. I think it's a pretty fair comment.
Well, I think everyone was excited about the lifting of sanctions on 16th of January this year. But you've only heard just recently about the Iranians complaining that things aren't happening fast enough. We've lifted sanctions, but we're not seeing the development or the investment coming through as quickly as we would actually like. And I think part of it is because sanctions in the US, primary sanctions of the US are still there. So the banking sector is, whilst there's a lot of projects and a lot of interest in the country and clients are going in there to see what they're going to do, the banking sector is still incredibly nervous about going in there because they're being penalised and continue to be penalised for things that they thought were legal 10 years ago. And that's one part of it. And I think the second part of it is the snapback provisions are also concerning financiers about investment or releasing funding into Iran.
So in case sanctions come back into place, is what you suggest. Yeah, the banks got so badly burned. You can list 5 of them that seem to get penalties
daily
on an analyzed basis. It's not easy. Humphrey, you were nodding here. What are your thoughts about the market itself?
Well, I mean, certainly we're seeing a lot of investor interest from Asia, from China, Korea, Japan, and from European countries looking at investing into Iran. So there's absolutely no question there is a huge amount of interest. The banking sector is difficult, but there are some small European banks that have now opened up correspondent banking relationships with Iran. So it is starting to move, and there are some banks locally, for example, in Oman, that are starting to develop. So there are ways of transacting financially, particularly if you're not in US dollars. In terms of hotels particularly, I mean, only yesterday I heard one of our guys was trying to get a hotel room booked in Tehran and was told basically every hotel room was booked for 3 weeks. So, I mean, they clearly recognize the fact that there is a huge amount to be done, both in terms of hotel rooms, but also the related infrastructure, the airport infrastructure, and so forth. So, I mean, it is definitely going to change, and the question is just how fast are things going to move, I think.
Yeah, they put new meaning into ingenuity because I went to South Central Iran and went to a regional airport, which the runway was incredibly bouncy, but I was just praying that my flight would get down there. I think we're a little bit spoiled by the new infrastructure and new planes that we get to jet around with in the GCC. Gentlemen, thanks a lot for fielding all the questions. Excellent discussion. I hope we did Christoph's service in terms of leaping to the next wave. Let's give a nice round of applause for our panelists this morning. Thank you.